To keep you updated on the capital and financial markets, here is a recap of what happened.
Indian online brokerages face a hefty hit to their revenues, say industry executives, after the regulator intervened to curb retail investors' frenzied trading of risky derivatives markets. The Securities and Exchange Board of India became concerned last year about millions of young Indians gambling in the derivatives markets to try to quickly profit from the country's soaring stock market. With 9 out of 10 losing money, it unveiled plans to raise barriers to trading and temporarily ban some prominent finfluencers that young people looked up to for financial advice. Daily volumes of index options plunged 70% between November and January, according to Jefferies, even though the rules are yet to be completely rolled out, and that is starting to hit brokerage groups that had profited handsomely from the trading boom. People who had no business being in the stock market were gambling, because you could trade as low as $1, said Siddhartha Baiya, managing director of Equitas investment consultancy in Mumbai. India's markets regulator is seeking broader powers from the government to remove unauthorized financial advice from social media platforms such as WhatsApp and Telegram, and to access their call records for investigations into market violations, a government source and a document reviewed by Reuters showed. This is the second time since 2022 that the Securities and Exchange Board of India has sought such powers, with approval from the government still pending. The request comes as the regulator has intensified investigations into market violations and clamped down on unregulated financial advice circulating on social media. Social media companies have also not complied with the government's request for access to their call data records and groups and channels, despite an earlier meeting with the regulator. The investment fund industry is set to undergo seismic transformation in the next 6 years as fee pressures, the rise of passive investing, and continued consolidation push asset managers to their limits. A recently published PwC report projects that passive funds will get a bigger share of the overall US market, going from 44% to 58% of total mutual fund and exchange-traded fund assets by 2030, as investors gravitate toward lower-cost options. Amid the increasing preference for passive products, the 2030 Mutual Fund Outlook by PwC forecasts that blended expense ratios for active and passive funds may decline by 19% compared to 2022 levels. This continued downward trend in fees is expected to have a direct impact on revenue streams for asset managers, pushing them to find cost efficiencies to remain competitive. Indonesia's securities regulator, which recently began to oversee the cryptocurrency market, has unveiled new rules for cryptocurrencies to be approved for listing on crypto exchanges. Among other things, cryptocurrencies must operate on public, accessible distributed ledger technology, have a clear utility or be backed by assets with measurable economic value, and be traceable without any anonymity features. The Financial Services Authority, known by its local acronym OJK, announced the requirements in a statement on the 12th of February, saying that it has transferred responsibility for cryptocurrency listing to approved crypto exchanges. The People's Bank of China said it would tender central bank bills totaling 60 billion yuan in Hong Kong on the 14th of February, marking the second time this year it has used the policy tool to stabilize the yuan amid tariff tensions with the US. The PBOC said it would tender 40 billion yuan in 3-month bills and 20 billion yuan in 1-year notes through the Central Money Markets Unit of the Hong Kong Monetary Authority on a fixed-rate, interest-bearing basis. Watch the latest episode of Coffee Talk to find out about what is going on in the industry, exclusively on FIMM's official YouTube channel. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.